Welcome back. You are watching Market Pulse. Let's put the spotlight now on Mphasis. This company recorded a steady set of second quarter numbers this time around, with profits seeing a growth of over 5%. Margins too have expanded this time. My colleague Priyanka Gawande connected with the management of Mphasis to really get a fine print of the IT company's second quarter numbers. Listen in to what they had to say.
I think growth's been fairly broad-based. If you look at direct channel, we've seen growth in our existing accounts, especially strategic accounts. We've also seen growth coming from new client acquisition, and more importantly, also the Blackstone engine continues to help us to feed the growth. Even our digital risk business, which obviously is still challenged on a YOY basis, we did see some good sequential growth. And on the HP and DXC side, I think the partnership as well as our core business both continue to see growth.
So talking about your margin levels, all the segments have seen a fair margin level. So how do you see it going ahead?
So we had already given an indication for FY18 we'll be in the EBIT of 14 to 16%, and we are well grounded for that meeting those margin indications.
So do you see any scope of improvement for FY18 as well?
I think so. I think also the fact that we have taken a lot of steps on the operational efficiency, and those are playing well, and that's how we've seen the margin growth in Q1 and Q2. I think they're playing well, and this will help us too, but we'll be within that band of 14 to 16%.
Right. So in terms of geographies, which are the main geographies that are seeing a lot of traction for this quarter too?
I think given that US is our biggest market, that was still our fastest growing market. We did see growth in Europe, but it is still lagging the US, and we've obviously called for Europe to be a growth market for the next 3 years. So we are investing. And given its size, we expect it should grow faster than the US, but I think we have some work to do.
So could you give us more details about the ground conditions in the US markets, and has there been any sort of pricing pressure in those markets?
I think if you look at it, right, we primarily play in the BFSI segment, so that's almost 70% of our revenue. Within that segment, the question really is where in the value chain of IT services do you play? If you play in traditional IT services, there's clearly a lot of challenge on demand as well as pricing. But if you play in next-gen areas, consumer-facing tech, AR, VR, analytics, cloud, I think there's some good opportunities and good demand, and pricing is also fairly stable.
So talking about the fixed price projects that have been on a rise from the last year, so how do you see the trend panning out in the next year?
So as you know, we have seen a positive movement on the fixed price type of projects. The type of deals which we are getting into, is basically on the service transformation. This will start with we are trying to push it into the fixed price model, which will help us on not only in a margin perspective, but better manage the projects. So we see that will be a positive trend going forward.
Right. Talking about the deals, are there any new deals that you have been venturing into? Could you give us some more details about it?
So the deal wins, especially on the direct channel, has been broad-based. And with the good pipeline, we feel that this will be good going forward. And I'm sure like last year we were in the 80 to 100 million. And systematically, we are improving that to 100 plus. And we are confident that will happen going forward.
So what has been your outlook on the utilization for levels for the whole year for FY18?
So I think while we improved utilization on a sequential basis, we are still below our historical highs. And I think there's a reason is because we're feeding growth. So I see that as an opportunity to improve our efficiency, but at the same time, we have to balance that with the kind of growth we forecast.
Right. So one last question. What has been the growth drivers for the current year? And also, what will be your outlook for the next year, coming year, FY18?
I think, as Nitin mentioned, it's a broad-based growth in all the different business segments, direct channel, digital risk, as well as in HP, DXC. And these, the good pipeline which we have will help us to grow. And we had already indicated from the direct channel, direct core will be at better than the market. And DXC, HP, we are now looking at also better than the market in the current fiscal year. And for FY19, with the good pipeline, we should be maintaining that trend.
Well, that's the management of Mphasis really giving us, an inside look at their performance this quarter. Steady set of numbers this time around. We saw that jump in profits and an expansion on the margin front, and the stock has taken, that the market has taken that news in its stride. 5% up at this point. In fact, I'll take you through some of the other mid-cap gainers. United Breweries is the top mid-cap gainer, seeing gains of over 6% at this point, followed by Wockhardt Pharma.